Hey guys, this is Sean Waller, also known as Showing Your Realtor. Continue to educate yourself because this business is always evolving. Just continue to learn. With it, talk to you guys later. What's going on, guys? This is Showing Your Realtor, aka Sean Waller. Whatever you want to call me, just make sure you call me. That's my thing that I roll with.
I like that.
I got two of my guys in here, right? I got my guy Raj and I got my guy Marnel from Meadowbrook Mortgage. Two of the dopest dudes I know. One of my guys is from Queens, so we got like this connection.
Represent.
I don't know what I mean? Marnel, he's from upstate, right?
I grew up, believe it or not, in South Ozone Park and then moved out to Long Island.
Oh, that's what I'm
now
talking about.
I'm upstate New York.
Queens get the money.
People in the house. That's it. We're all about getting the money.
That's what's up. Guys, give them a formal introduction to yourselves.
All right. My name is Rajin Ramdeholl, Senior Vice President with Meadowbrook Financial. Been in the industry 19 plus years, doing a lot of things, and just happy to be a part of this, man. Love having great conversations about the market, mortgages, any which way we can help people out there.
Marnel Garcon, Meadowbrook Financial Mortgage Bankers. I am a licensed loan officer, been in the industry for over a decade. And like Rajin said, I love these type of conversations because it keeps you guys engaged, and there's more information to come.
Yeah, that's what it's about. So this podcast was designed to give as much free game as what I call it as possible, right? And I love that. I love to give free game from people that could give it from our perspective. You know what I'm saying? That's young. Even though Raji's been in the game for 19 years, he looks like he's like 23.
I started at 21.
You started at 21?
Yeah.
Damn.
Been through it, man.
Been
Since 2003 with the ups, the downs, sideways movements of the market. So I've seen a lot.
You're still here. A lot of people who can't say that they're still in the business at the same time doing it. We were having a candid conversation before we even started rolling, which we were rolling, which we didn't know. So we probably used it anyway. But we were talking about rates.
Yeah.
Give us a little perspective of what's going on right now.
Well, I mean, today's a perfect example of what people are going to start seeing. Feds are starting to raise rates as of today. Now, they're considering raising rates another 3 to 4 times. And the reason why all of that even is happening is because of inflation, right? So if anybody looks at the news or just looks at, your pocketbook or, your wallet, and you're realizing the cost of everything is going up.
Yeah, that dollar's not getting you as far as it used to anymore.
And so what's happening for the last 12 months almost, every single month, they're looking back at, the cost of everything for manufacturers to make the goods, the cost of consumers to buy the goods, and inflation numbers are at 8%, 9%, which we haven't seen in almost 40 years, right? And so if we go back to like 1981, when inflation was this high, the only thing that feds were able to do was actually raise rates to stop the flow of money and bring back down inflation. Mm-hmm. Now here's something which a lot of people don't know. Back then, they had to raise rates up to 16.6%.
Damn.
To bring back down inflation.
Bring it back down. I hope we don't get that.
So that's just to give you a little bit of flashback.
Yeah.
Now, I don't think it's going to be as bad now, but it's just to show you why the feds have to raise rates. And again, they're going to start raising rates from today, and they're probably going to raise it another couple of times before the end of the year.
Wow. So now is still the best time to buy, is what you're saying. Buy it now before the rates really start to kick up. Marnel, so what are you seeing as far as, because the market's still nuts, right? Rates are rising. People are still bidding way over asking price for these houses. What are you seeing on your end as far as like applications that's coming in, people that are getting these accepted offers? Like what are you seeing in the market right now?
Well, I mean, right now, for sure, as a loan officer, you have to get creative with how the pre-approval goes out. I always make myself available to the listing agent to have a direct conversation about the client, right? Because often they're only seeing numbers on paper, right? So you kind of have to highlight, this is the prospective client that I have, this is what their credit scores are, this is what the debt to income ratio is. Why do I have that conversation? To put in their head that, God forbid something were to go wrong, this deal can actually still work. A lot of people right now are shopping at the very top of their budget. And that's unfortunate. They're not finding the houses that they want. Prices are going up, so they have to put up more. And then you find yourself at the very top of your mortgage qualification. Now, if one thing goes off, one interest rate hike, and the deal just doesn't work anymore. So you kind of have to think for your clients and think ahead of these changes.
Got you. So another question. So both of you guys can answer this question. What do you usually see when I'm gonna speak from my perspective, right?
Good.
Our people are usually a little slower to the game. We always are. When we were kicking 2 years ago, rates of 2.5%, buy a house, refinance, buy a house, they were all waiting for the market to crash. Market hasn't crashed yet. Started 2020, still hasn't crashed. What do you usually see when people are starting that process? Like, what do you think is holding people back from actually getting on the ball, putting in these applications, getting it going?
Here's a funny thing, right? The same thing that people are doing now, and the reasons what's holding them back is the same reason that people were holding back buying houses when rates were at 6 and 7 and 8% 19 years ago. People just overthink. They overthink, they procrastinate, and there's a saying that calls analysis paralysis.
Analysis paralysis,
right?
Yep.
And so it was the same thing back then when, again, we were talking about this when one-family homes were going for $300,000, two-family homes were going for $500,000. And you're like, this is still a great time. Even though the rates are slightly higher, the prices are great. And people are like, well, I don't know. I don't know what's happening with the economy. I don't know what's going to happen with my job. I don't know what's going to happen with rates. I think rates are going to come back down. And it was funny because I remember having conversations with people when rates were at like 2.25%. And I'm like,
what else are you waiting for?
Every single person should go out there and buy a house right now.
It's literally free money.
Don't think about it. If you had whatever it is, 3%, 3.5%, if you were a veteran, you had, I remember doing a deal for a guy. He came out of pocket $575 to buy a house.
Wow.
As a veteran.
Wow.
$575,000 in Westbury.
Wow.
I'm like, go out there and buy because you're never going to get an opportunity. So it's the same thing right now, right? And it's all a matter of perspective. So when you hear rates are averaging around 4.25, 4.5, and people might think, oh my God, that's high because it's gone up from the 2s. But again, go back 5 years ago when rates were in the 5s and 6s, right? So you're still getting it at a discount at 4.25 right now.
Yeah.
And so I think that's important for our people to realize is that here's the thing, there's never going to be the perfect time or perfect scenario.
Yeah.
So people will always try to offset and say, oh, well, rates at 4.25, so my credit score is 680. You know what? I'm going to hold off, get my credit score to 740, so I'm going to get a better rate.
Yeah.
But they don't think about, okay, so if the rate goes up to 4.5 or 5%, your 740 is putting you at a 5% interest rate. So you're already, again, at a worse position, right? Or they think, oh, yeah, I don't want to go put 5% down. I'm going to save money up to put 20% down. But now the house price and rates have gone up. So the point that I always tell people is you got to speak to a professional and listen to their advice and stop making those decisions on your own.
And stop listening to family members about it.
Exactly.
That's one of the hardest things for our community not to do is, unfortunately, family members are the first ones to kind of guide you because of their experience, and they'll tell you, hey, listen, this is what you should do. You should save up and put 20% down. But that was in a market where home prices were 120. You know what I mean? And in comparison to that now, saving up that kind of money is
almost
impossible for New Yorkers, right? So one of the things I love to do with clients when they tell me about, oh, this is the house, this is as much of a house as I can afford. I don't want to go over this. Is really show them what $10,000 means, what's $20,000. In their head, they're thinking, 500,000, 520. Now I have to come out $20,000 out of pocket. No, if you're financing this, it could mean a matter of $12 a month in terms of the difference, right? So cut your Starbucks, cut your Hulu, and here's your home. And sometimes it's exactly what Rajin said. It's those little things that make you overthink, and think about, oh my God, like now this house is $550 and I can't afford $550 because I already budgeted for $500. Let a professional sit with you, go over everything, go over the taxes, the homeowner's insurance that you might be overquoted for, every possible aspect of it, to make sure that you can at least become a homeowner, right? Because that's the name of the game. If rates do come down, if you don't have a home, what does it matter?
What does it matter? Yeah.
You know what I mean? Because if let's say you buy the house at 5% and rates come down, to 3% again, you have the option to refinance, like many of my borrowers did. Yeah. But if you're out there and this frenzy and rates go down, what do you think is going to happen again? The same thing that happened last year and the year before.
And you're renting, so when you're renting, your increase is most likely going to be higher than anything anyway.
It's already happening.
Yeah, exactly.
It's already happening.
And that money's literally going to nothing, and you're paying it every month. You know what I mean? And the funny thing is, like I said, it's amazing how people's psyche is. Like they'll pay rent, they'll cry about it, but they'll pay the $2,000, $2,300, $2,500. But then you tell them about a mortgage, I don't know. I got a mortgage. It's psychological, with a lot of people. And the crazy thing about it is, especially like I could say, we've seen a lot of the experience of it, especially me. I've seen the people that go out and just do it and the impact real estate has made in their life. Like I've seen people, through real estate, buy a property, refinance, take money out, start a franchise, have 3, 4 businesses, 5 businesses, have multifamily properties, commercial buildings. Like I've seen the success of real estate from people saying, all right, you know what? I'm going to take your advice. I'm going to buy a house. I'm going to pull the trigger and I'm going to do it. 5 years, 10 years, 15 years down the line, they're sitting in all this equity, all of this wealth, everything that they have. Yeah. And I've seen some of the same people from 5 years, 10 years, 15 years ago that didn't buy a house and they're still paying rent. Still thinking about, but I mean, me buying a house right now, I'm really going to be paying the height of the market. Yeah. But you would say the same exact thing 5, 10, 15 years ago, but you didn't realize, add that rent up for the last 5, 10, 15 years, and you paid $200,000, $300,000, $400,000 out of your pocket. You could have paid off for a house by then. And had equity and had money that you could have pulled out to do other things and other ventures. And I think that's the important key that people need to realize. The mindset has shifted when it comes to buying a house. Yeah. I think 30 years ago, it was I'm buying a home and I'm maybe going to live there for the next 20, 30 years. That home. It's shifted where it's more of an investment.
It's more an investment now, yeah.
I'm buying it, but I'm not thinking about 30 years. I'm buying it, 5 years, I can leverage this property. 3 years, I can leverage this property. I might rent it, take some equity out, buy something else, and keep working my way up and keep building my portfolio, right? So again, it's more from that investment perspective versus, I'm holding this on for 30 years.
And when people, it drives me nuts when people are like, I don't want to be tied down to a mortgage. I want flexibility to move. And I'm like, do you plan on going anywhere in the next 5 years?
Right.
No. You've been in the same spot forever. Like, where are you going? Right. Yeah. So it's nuts. Let's talk about down payment, because we mentioned that 20% myth, which I don't know why people still, we have the internet now. I don't know why people still think they have to put 20% down. But let's talk about some ways that people are saving money. What ways can people, let's talk about SuSu, right? Because that's big in our community. Yeah. How does SuSu work? How can we, because you can use that SuSu, talk about SuSu. Tell people what SuSu is, first of all.
Yeah, absolutely. You want to take it?
I'll take that. Yeah. So, I mean, being a Haitian American, I deal with that all the time. It's a personal loan program that people of our community get together and they pay into and get paid out $10,000, $30,000, some odd dollars while they're paying into this savings account. Oftentimes, some of the problems that you run in with is the fact that they're depositing all of that money that can't be sourced. So you really do have to kind of maneuver with your loan officer and speak about, how to better do that, and try to get as much information as possible about the accounts so that you can source it properly, so you could be able to use that. Utilizing that, I've talked to people that, honest to God, it's amazing. I just met with a client in New Jersey who has $85,000 saved from doing SuSu, right? Wow. Between him and, he makes $45,000 a year, she makes $30,000 a year. And right away you start to think, like, how are they able to do this? Yeah, yeah. And it really is just, and I talk to a lot of clients about this, and I take a lot of what I see from my clients, for myself, discipline. Things that you might be utilizing, going out all the time, little things like that. That little bit of money, if it's $500 here, $1,000 there, goes a long way towards that savings. And here you have buying power now to come into a market that's maybe a little bit, nuts, where you can maneuver and say, all right, well, I have this much money, I want to put this much down towards my home. SuSus are great programs for that particular reason.
How do you source that money? How do you?
Good. So that's a great question, right? Because a lot of people might want to do it, but they don't think that, they can use that money, because there are, and I hate to say it, but there are lenders that don't understand how it works. So they don't understand how to paper trail it. And so they just tell a client off the bat, you can't use SuSu money. You can paper trail it, because there's an accountant that handles, or like the
main person. It's like a ledger for the most part, right?
As long as you have the ledger, You have the person that's holding that shows you all the paperwork of how they're collecting the money, when it gets paid out. And again, they'll go back and show you the payees and how they've gotten paid out their money. As long as you paper trail that the right way, you can absolutely use that money.
That's dope.
And so we've done it time in and time out with a lot of our clients, but that's where also experience comes into play and knowledge and understanding. Look, all banks are not the same. All lenders are not the same. And so sometimes I always say, and even for me, I tell my clients all the time, have conversations with other companies out there. Have conversations with other lenders, because only then, two things. Number one, you're going to know what I'm telling you is facts. And number two, you get to get different perspectives of things. So if sometimes your lender says, oh, well, we can't do that, just reach out to someone else. And if that person says, yes, that can't happen, at least you have a little bit more clarity. But going back to what you were saying in terms of SuSu, I know for a lot of the Caribbean community and beyond, it's a great way that they
it's like a forced savings account in a way. Yeah.
And it's perfect, man. They have their paperwork. We educate them, like Marnel said from the beginning, of what we need. We get all that documentation and we can use it.
And you're good to go. How does when should they start depositing that money into their account? After they speak to the loan officer or prior to it?
So we try to tell them, okay, when we do a pre-approval process, we always try to ask them, like, in terms of assets, where are your down payment money coming from? If we see their bank accounts, we always ask them additional questions. Do you have a 401k, a pension, a retirement? Are there other like savings that you're partaking in that we can utilize any other assets? And so then people will be like, well, I don't know if you guys know about SuSu or anything. And we might ask them that, like, do you have a SuSu or anything? And so people will be like, oh yeah, I do have that. I didn't know you guys could use it. And I said, okay, so when do you get your draw? And so depending on when they're getting their draw, of course, we'll talk to, the account that's holding everything and find out when their draw is. We'll get all that paperwork together, and then they could take their draw even before or after they're in contract. As long as we have that documentation to show when their draw is, it could be before or after, it doesn't matter.
That's dope.
So that while they're in contract, they can even get that draw then, and we can still source it.
And you can still source it?
You can still source it, because remember, all the paperwork is there.
You just need the ledger.
You knew, according to the paperwork, it'll say, their draw was today or last week or, next week. Yeah. So it's all there documented.
That's dope. I didn't even think of that. See, that's why I had these two guys came, because I knew no one could really break it down the way you guys could, and I was like, I got to get Raj and Marnel on this plan, because I did not know that. I didn't know after they were in contract you could still go back, but it makes sense if you have the ledger. That makes sense.
Exactly, because all the ledger is showing you is that the person was putting money in. These were all the draws that came out when they came out, and this is when your client, their hand was.
That's dope.
So it could be even after you're in contract, but you're still able to source it.
That makes sense. All right, cool. I'm glad you broke it down, because you put some perspective on that for me too.
Just to build a little bit on that too, man. For me personally, I love when there's shifts in the market.
Okay.
And I love when things start to shift, because what it does, it kind of filters out experience from inexperience. And this is where it's important. And again, going back to, when the mortgage collapse was back in like 2008, I saw the biggest spike in my career at that time, in that moment. When other people were getting out of the industry and everything else, my career started to take off. Why? Because people turned to experience.
Yeah.
And family members were like, hey, listen, this is who you need to work with. This guy has the knowledge. He knows how to put deals together. He knows how to think outside that box. And that's where experience comes into play.
That's what comes in. What got you into mortgages? What made you want to go into that field?
I got married.
Well, there you go.
I swear to God.
There you go.
I swear to God, man. I tell this story all the time. I never sold a thing in my life.
Okay.
And I got married. I needed a job. I was working in the hospital, and my dad saw a newspaper, ad for loan officers, and he's like, "Why don't you give this a try?" I walked in there, and I sat in a room, and what they used to do is they would do trainings for 2 weeks.
Okay.
Out of that training class, they would determine how many people would make it out and then get hired by the company.
Okay.
So I was in the class with like 18 people, and I'm sitting there like, this person's a realtor, this one did insurance, this one did sales for auto, and I'm like, I'm gonna go buy Mortgages for Dummies. There was a book.
Really?
And I went and I bought Mortgages for Dummies. I learned as much as I could, read as much as I could, and I was like, look, I'll just give this a shot. And it was me and 3 other people that came out of that class. And,
wow.
the sales manager at that time, he was like, I don't know, man. There's just something about you. I just feel like, you know, I want to just give you a shot. And first day I jumped on the phone, I read a script. The client was like, "You sound like you're reading from a script." I'm like, you know, throw it behind me, and I just had a normal conversation. And ever since then, man, I just fell in love with it. And everyone that knows me, that, you know, knows about this industry of mine, and they're like, "Man, you were just meant for it."
Yeah,
you know,
yeah.
I can't see myself doing anything else.
That you didn't do sales prior to it because you wouldn't know that from the body language. You know what I mean?
Yeah. But you know what it is? Like, growing up where I grew up, man, we were always like, we were people persons. You know what I mean? Like, I love talking to people, interacting with people, hanging out, like, you know, and for me, it was just like how you and I are having a conversation. It's just how I have a conversation with my clients.
Yeah.
I listen to their questions, their concerns, everything, and I just try to find the right answers to, you know, to help guide them through, man. And that's always been my North Star in a sense, just talking to people, helping them out.
That's what's up. What about you? When did you get into it?
So I kind of fell into mortgages as well. I went to school to be an architect. Was a junior
Different
architect.
shift.
Yeah.
Was a junior architect for years, and then 2007 happened. Company I worked for went under. Didn't have a job. You know, everywhere I applied needed 5 years experience as a junior architect. Found 2 jobs, both outside of New York. Couldn't do it. So a buddy of mine was in mortgages and was just like, "Hey man, you know, why don't you give this a try?" And came in, sat down, met with the manager at the time, went over everything, just like Raj read from a script. Didn't feel right. And the best part about it was at that particular time, the manager that I had came over and was just like, "All right, I see you reading this and it's not working out for you. Why don't you listen to the guys?" And every other guy came from stocks and was just quick talking and everything, right? Worked for them, but I couldn't do it.
Yeah.
So I had to kind of adapt to myself and just learn the product and be personable with people. And that's kind of how I punched my way through and just had long form conversations with people. Sometimes deals went nowhere and I didn't know it until we hung up the phone that I just wasted, you know, an hour. But through that you learn and you adapt and you become, you know, more comfortable with yourself. Because much like him, sales was not something that I saw in my future ever.
Yeah. I think most people like that because I wasn't into sales at all. I get mad with some people when people call me a salesman.
Well,
You're just a people person.
I'm a people person, yeah.
You know what I mean? Like, you just like talking to people, meeting new people.
And it works.
And it just so happens that person is looking for a house and you can help them find one and it matches, right?
Yeah.
But the main thing is you have to just be a people person and just like helping people out and talking to people.
And talking to people.
There's an authenticity to it too. Like you really can tell when someone wants to help someone out.
Yeah.
And look, especially these days, we bend over backwards for our clients to make sure that they get that home, right? We try our hardest to get them over that hump.
Like Raj said, when that market shifts, that's when the real comes out anyway. The dudes that were able to a year and a half ago freestyle it and not know what the hell they're doing because the market worked for them. Now when it's shifting, you're gonna see a lot of people fall out of the game again.
Yeah.
And I think that's also important when you're looking at, you know, what's happening now where you have like bidding wars and everything else. A lot of the conversations are between, like, just a couple weeks ago I closed a deal where my client was one of 26 offers. Got his offer accepted. Had a great conversation with the listing agent, expressed confidence in being able to close the deal, went through all the specifics, let them understand, you know, the due diligence that we do and why it's important for, you know, for us and our reputation, and that's really important. And, you know, a 10-minute conversation, listing agent was like, I don't think there's anything else I need to hear.
Yeah, that goes a long way.
And I think it was 16 days later at the closing table.
What, 16 days after they accepted
From
the offer?
contract. Yeah.
Get out of here.
16 days.
Damn. Okay.
16 days. That's what we do.
That's
and
what's
she
up.
was like, she told the client, she was like, I have cash offers that sometimes don't close that quickly. I'm like, as long as you have a loan officer or a team or a company of people that know what they're doing, you get the job done.
That's what's up. What are you guys seeing as far as like people that are coming? Because everyone wants to be an investor now, right? That's the name of the game. What are you seeing as far as people that's coming in? That's like, yo, Raj, Marnel, I want to buy a 2-family, 3-family property. Like, how are you structuring them through? What are you telling them to walk them through that process? Like, what would they need? Because it's a different type of loan, right? Yeah. Especially for a 3-family. If someone's looking for a 3-family, what's the starting point? How are they getting into that?
So a lot of what's happening over the last 3 years has been the rise of social media.
Yeah.
And because of the rise of social media, people looking and wanting to follow the trend, right? So when they hear some success stories of people that are buying multifamily properties in the Burr, right? We hear about that, right? You know, people want to buy a 4-family, then a 3-family, then a 2-family, and keep working it. Here's the thing, and this has always been my belief. You have to find what works for you. Don't follow the crowd. Because you might not have the appetite to handle it.
Yeah.
Right? Not everybody can handle tenants and tenant issues and all these other things that go along with it.
Yeah.
If you have an appetite for it, it is a great starting place. And we've done tons of that business.
Yeah.
For most first-time home buyers, take advantage of the FHA, right? Take advantage of your VAs. You could put down 3.5% and buy a 4-family and, you know, have the rent paying your mortgage and putting money in your pocket. And it's a great place to start. So we've seen a lot of people start that off, and then they can follow the trend of, you know, you can refinance that property, buy another multifamily with another FHA a year or 2 down the line, and you could keep repeating that process.
Yeah.
And as I said, it's worked wonders for many people, but, you know, for others, and I could tell you this, it's not worked out well.
Yeah. Yeah.
Because as I said, they didn't realize what it takes to handle tenants. And so when that kicks in, they're like, oh. And so look, here's the thing I think. There's nothing wrong with also doing it on a 1-family.
Yeah, I'm glad you brought that up.
You buy a 1-family. You understand what it's like now, especially because here's the thing. For a lot of people, you're going from paying rent, and now you have a mortgage. You have a little bit more responsibility involved. And so it's okay to gradually get into being an investor. So you buy a 1-family, you're like, okay, I get the feel of paying bills, paying the mortgage. A year and a half or a year down the line, you can refinance, pull some equity out, buy another 1-family, and then start building from there. And you can build your portfolio from there.
Straight from there, yeah. You don't always have to jump into the multifamily.
I know a guy, true story. I know a guy owns over 6,000 properties. Started it all from buying condos and single families.
Wow.
And he just kept leveraging it, leveraging it. 6,000 properties later.
Wow. Damn. Okay.
It really is that simple too. And for a lot of my clients, what I try to tell them, especially when you're dealing with tenants, a lot of people hear social media and they hear, you know, this can pay for your mortgage. And the mindset is, all right, so I don't have to pay for my mortgage. This guy's gonna pay for my mortgage. But if you actually understand that, all right, great, this guy's giving me money to pay my mortgage, but I'm gonna pay my mortgage. I'm gonna put this one aside. Now, if you do have a tenant issue, there really isn't much of an issue. You have the money in your account. You're prepared for any changes. Things are going to break down. It's a house, right? Yeah. You're going to have tenants that are unfortunately unruly and are going to break your stuff. So you have to be prepared for these type of things and be ahead of it. If you're spending that money like you already have it, then yeah, you are going to get jammed up because, you know, and a lot of people during the pandemic, you know, that was something because as your tenants lose their jobs, and thank goodness, you know, there's like the mortgage forgiveness thing, but what happens when it kicks back up, right? And then you have to pay, and your tenant, unfortunately, doesn't have any of the money saved up because they're taking care of their own thing.
Now talk about the forbearance thing. I'm glad you actually brought that up. Because it was always a lot of different terminology to what the hell was going to happen when all of that was lifted, right? What's going on with that now? What if I, for example, say I didn't go into forbearance. I'm just using myself, but say I went to forbearance in 2020, and I'm like, all right, I'm not, you know, I'm good. I don't got to pay the mortgage. What's happening when everything is lifted on my end?
So let's go back for 1 second, right? Number one, when the whole thing happened with COVID, and a lot of people, unfortunately, thought forbearance meant forgiveness.
Yeah.
And so they were like, oh, I don't have to pay my mortgage for 6 months. All right. Yep. I'm gonna pocket that money. I'm good. I don't have to pay that. Right. So there was this huge wave of people that, even though they were working, had an income coming in, could pay their mortgage, just thought, well, forbearance meant forgiveness. And so then they didn't pay it. And what happened through that course of time, if you were in forbearance, a lot of people that were in forbearance, you couldn't refinance your mortgage.
Yeah.
you couldn't take advantage
Couldn't
of
do
those
anything.
lower rates.
Yeah.
And they were like, but nobody told me that.
Yeah.
No one told me that. Well, number one, it wasn't forgiven. It was either put to the back of the loan, right? Or that I had to pay back that money. But at the end of the day, like, that's the reality. Banks aren't in the business to lose money.
Exactly.
They're going to get you one way or the other, right? You know what I mean?
Exactly.
And it's funny because I remember, you know, a long time ago or a longer period of time ago when it was all about modifications, right? Everybody was riding the train of modifications. And the funny thing was there was a good percentage of people that didn't get approved, that went 4 months, 5 months down on their mortgage. Bank calls them up or send a letter and says, you're now in foreclosure.
Wow.
And now you got to get an attorney and go through all this other process to get yourself out of it to save your house.
Yeah.
When you had the money all the time, but you were just trying to, you know, miss your mortgage payment so you could get a modification, and it didn't pan out. So it's the same thing we're starting to see, like with the forbearance, now that a lot of it is over. The good thing is, you know, for most people, it's on the back of the loan or they had to modify. And so now they can, in a sense, still go back and buy a new house or refinance. But, you know, it's important for them to understand and use this as a lesson that if, God forbid, this situation happens again, get all the information.
Get all the information. That's what people, like you said, still working. Nothing ever changed for them. They went to forbearance. They're buying new cars.
Yep.
And they still have to pay the money
They
back.
still have to pay the money back. I'm like, what the hell are you doing, man? Like you said, people thought it meant forgiveness. Like,
But that's the thing.
I wash my hands out of doing
I've
it.
watched a lot of people just spend the money,
Yeah.
and I'm just like, well, if you're still working, and you're now working from home for most of them, so you're cutting your expenses and gas and everything else. What are you doing taking this when somebody else that's unfortunate can actually benefit from this program?
Yeah.
Right. It's not for everybody, and the sad fact of the matter is it's information. A lot of people just don't get the correct information and run out there and just do things and then get jammed up. Again, rates were in the twos and some people couldn't refinance because they wanted to skip a mortgage payment that they could pay.
And I remember, you know, and that's where relationships are important, man. Because I remember I get a ton of phone calls and people are like, what is this forbearance thing? And I'd be like, did you lose your job? No. You still making the same money? Yeah. Should I do the forbearance? No.
Yeah. Yeah.
And sure enough, when rates came down to like 2.5, 2.25, and they're like, can I refinance? Yes, you can.
Absolutely. Yeah.
You're good.
Yeah.
You know, but the other people that were in the forbearance, they had to now pay themselves the same money that they didn't want to pay, that they had sitting in the bank. They had to now take it, pay themselves current, get themselves out of forbearance, and then they could refinance. You know? So the bottom line was, you still couldn't get away from it. It was still your obligation. You still had to pay the money. And so there wasn't anything as...
I had people telling me I was out of my mind for not taking the forbearance. I'm like, what the hell are you talking about? Why do I need it for? People just thought it was like candy. They would just, everybody was just taking it. I'm like, I'm not going into for what, man?
Like everything else.
You're paying it one way or another. So like I said, like if you did take the forbearance and now you have $35,000 there, it's on the back of your mortgage.
It's on the back of the mortgage, yeah.
You still owe that debt.
Yeah.
So when you go to sell your home, you're still getting that $30,000, $35,000, $50,000 less because you got to pay that money off.
Refinancing, same exact thing. We have to pay that off.
Yeah.
You know?
Yeah. Damn. But still, what's the name? You guys have been on social media a lot lately. You guys have been getting a lot of game. What made you shift? Because you just started really, well, you've been kind of doing a little social media for a little while, both of you guys. But I noticed the shift. I noticed the shift in production. I noticed the shift in just the quality of everything that you're putting out. What made you go that route?
So, so here's a funny thing, right? I really started pushing social media, I think it was almost 6 years ago.
Okay.
And I hired a full-time social media person. I remember I paid a good amount of money to actually have someone direct the first social media video that I did.
Okay.
Right? That's 6 years ago. And I was always like, because for me, I do a lot of research and I kind of always look at where the markets are going or where just trends are going. And I realized, and I said, well, if social media is going to take off, I have an opportunity to put myself out there to just a massive amount of people, right? And market to a massive amount of people. And I remember 6 years ago, I came out with a video that was titled, Who is Rajin Ramdeholl? And we shot that video, had a whole production crew, we put it out there, and I think we got like 75,000 views.
Really?
And
that's when everything was all organic too.
And again, this is 6 years ago, right? And we got like 75,000 views just in like the first couple of days we put that out. And it was crazy because I was like, whoa, all these people that I remember, friends, family, just people in the past, like everybody's like, oh man, I didn't know you were in the mortgage industry. Oh man, I forgot that you were in the mortgage industry. And, you know, they started like reaching out. And I'm like, okay. And as I said, I off of that went and I hired a full-time social media person.
That's what's up.
And people were like,
what the hell are
you're
you
crazy.
doing? Yeah.
You know, and again, granted, back then the video was very different, the content was very different, and so with everything else, the reason why we've kind of dialed it up a little bit more is because you got to keep staying ahead. You got to keep looking at how do you separate yourself, how do you stay ahead of the trends, how do you keep establishing your brand and putting it out there. And you know, look, now we see just how mainstream social media is. And how it's working for everyone. And like I said, for us, we got to keep staying on top of that.
Yeah.
Keep
Have you
turning
seen
it
like
up.
an uptick in business? Has it shifted a little bit? Yeah.
So I mean, fortunately, at least like I could say for me, I've seen consistency.
Okay.
And what I mean by in terms of business and consistency, I've had over the last 6 years consistent realtors, investors, clients, you know, reach out based on those posts. And the main thing is, I look at it and I tell people all the time, it's your resume.
Yeah.
So
that's your new business card.
How people end up doing, how I get business is people be like, oh yeah, I saw your post, and they'll share it, or there are other people who share it and be like, I saw this, I saw that, you know, I want to talk to you about what I'm looking to do.
Yeah.
And so I think it's been really great, but I think as social media has continued to increase and become more mainstream, we're definitely seeing more of an uptick in people, you know, reaching out, wanting to get more information about what we do and stuff like that.
Yeah, I mean, for me, it's the same exact thing. I remember the video that he's talking about because that's the video that kind of clicked into my head.
That clicks on for you too?
And I'm like, yo, what's this guy doing? You know what I mean? And then that's when you kind of see like what's happening and the way that he's engaging with people. And for me, what was important was really just making sure that people knew what I did, because exactly what he talked about. I have friends on Facebook, right, that know me for many years. They know I'm in finance, but what do I do?
Yeah.
Right? And when you post something like that, then they remember, oh, I have a guy now for refinancing.
Yeah.
I talk about reverse mortgages. They're dealing with something with a family member that unfortunately, taxes are going up on.
I was going to talk to you about reverse mortgages.
And right away, here you go. Here's someone that you can help now that knows that you have an experience in that market, that you understand the product, and they trust you. And that's what trust. Social media really has created. It's just that
we want to work with people that we can relate to.
Exactly.
Definitely.
It's a game changer, man. Because like I said, if anybody's not using social media, you're way behind.
Yeah.
And I'm sorry to say it, you're way behind, and you're going to continue to get left behind because it's a new age. Everything is going digital. Everything is going to that side of it now where, like I said, if I'm going to do any type of business, I'm looking up to see, like, let's say I want to even go to a restaurant. I'm trying to see what their Instagram is like.
Exactly.
Right?
Same here.
I'm looking up and be like, yo, how does it look? Get a feel for the inside, the food, and I can get a quick glance of that. It's the same thing I tell people for mortgages. You want to know more about somebody, how experienced they are, knowledgeable they are, go look at their social media. See what they're talking about, what content they're putting out there. If they have no content at all, I'm sorry, I don't really want to talk to that person. I don't really want to go to that place. You know what I mean? I want to know because my time is important. I want to get a good feel for what I'm doing ahead of time. And so that's why I said it's a game changer, because now you're putting out your resume to anyone that's out there, that if they want to do business, they can see who you are really quick and determine if that's the guy or not the guy I want to work with.
Yeah, because like you said, it could go either way. You can either be the person for them, or you could be the total opposite of what they're looking for.
I mean, beyond what we do, I mean, there are junior agents that I talk to on a day-to-day basis, realtors that just got into the business, that understand, and they're young, so they understand social media very, very well. How to maneuver on TikTok, how to post constantly on Instagram, how to reshare something, and from that alone, they're getting a ton of business, and they're brand new. You know what I mean? So now someone who's behind on the times, has the experience, is being left behind because I don't know what you do.
And that's the thing, like you said, it could be the young guys that's what they know.
They're hungry.
This generation, that's what it is. And if you can combine that with the knowledge that we have, like it's a game changer.
And that's why I said, that's why it's always important to stay ahead.
Yeah.
Know how the market's changing, know how just everything is shifting, right? And technology is the way right now. And so you got to position yourself. You know, they always say like, you got to do your research and you got to always stay ahead, stay relevant. Because the minute you stop, you're way
done.
behind.
You're done.
You're way behind.
Especially nowadays.
And so all those younger guys, they're coming for your spot. You know what I mean? And you have to see where that trend is going and be like, okay, I got to position myself here.
Yeah.
And for me, I think that's what's helped me stay in the industry almost 20 years. You know, same thing, man. I'm always looking at trends, where it's going, where I need to be. And a quick example of that is, you know, a few years ago, I had the company go out and get a mobile app, develop a whole mobile app for the company where you can literally do a whole application from start to finish, e-sign all your docs, do everything right from your phone or your tablet,
Smart.
right?
Smart.
This was 3.5 years ago we launched that.
Okay.
COVID hit.
Took off. Yeah.
I
You
mean,
didn't have to adjust.
we
You didn't
saw
even have
such a boom because people were home.
Yeah.
People couldn't go out and scan documents. We're like, hey, there's a scanner right on your phone.
Yeah.
People then had to, you know, go to find a print, go to like Staples or wherever and print stuff out so they can sign or come to the office.
It's right
do it
there.
right on your phone.
Right there.
And we just saw everything take off. But again, had we not looked at where technology was going and how to leverage that, we would have been behind the times and missed out on that opportunity.
You'll be trying to do it now.
That's right.
You know what I mean?
And now, you know, everyone's doing it. But again, you always have to look at how can you stay relevant and stay ahead.
Dope. So speaking of staying ahead, staying relevant, you guys have been involved with this mixer that's going on in Brooklyn. Give us a little breakdown of what the hell's going on with that, because it's everybody's outside now, right? And we back out, and I'm like, yo, this is the party that you got to go to. This is the networking event that's popping. Are you involved with it as far as the marketing and all that?
So I'm part of the New York Real Estate Entrepreneur Mixer. Shout out to that. If you haven't gone out to it, you got to check it out. So good buddy of mine, actually turned into a good buddy of mine, Curtis Quao. We went to a mixer 5 years ago, and it was in just a smaller venue out in Brooklyn. I think it was 333 Lounge. And I was like, I think this is important. This is important because there really weren't a lot of mixers and things like that going back on, like I said, 5 years ago. And I'm like, this is great because in that small room, I think it was like 30 something people that came. They had commercial lenders, they had realtors, they had other financial guys in Brooklyn and from Manhattan that were there, and just like insurance people, all different types of people. And I'm like, this is really important because if I can now have all these people in my contacts, if something comes up, if there's a question that comes up and I'm talking to a client or whatever it is, and there's a title question, I could call the title person and say, hey, this is my scenario. What would happen here? Or an attorney or a home inspector or whatever it may be. I could get someone on the phone and get answers.
Dope.
And so that's what started that. And Curtis and I just kept pushing it out there and just, you know, kept pushing the idea of bringing people together. And the beauty of it is, like the last event, we had over 200 and I think it was like 240 people in there.
Really?
And you've got lenders, tons of lenders. You've got tons of realtors. You've got tons of all different types of people that are professional in their own background, all coming together to learn from each other.
Yeah, so about
and build
collaborating.
connections.
Yeah.
Because again, that's what's important.
That's what's
right?
important, yeah.
You know, Sean, you think about it. You're out there, you're looking at a home, your client asks you a question. Hold on a second. Let me call this guy.
Yeah.
Hey, I'm here with a client right now. This is a scenario. Do you think, you know, what would you suggest, or what, you know, how does this work, or whatever the case is? You get the answer. How much more value did you just add to your client? And they're looking at you like, oh wow, he's got the connections, he's got the answers. And so that's what that mixer is all about, is just bringing people together. Even if you're in the same industry, you can all learn from each other, build together, and help each other out, man. And I think about so many people over the 5 years that I've seen that have come to that mixer and the success that they've had now and working together with each other from that mixer and just growing. I mean, it's been amazing, and I'm happy to see that I was a part of it and other people were a part of putting that together. to build something out like that, man. And I think it's exciting.
It's a monthly thing, because I noticed that you've been doing it.
So we've been now going back to doing it as a monthly thing.
Okay.
And like you said, people are ready to get back out and make connections again. And I think more and more people are starting to realize, and I know we've been hearing this a lot out there, and I think I agree with it too, collaboration over competition.
Yeah.
All day.
Right?
All day, yeah.
I talk to lenders all the time that are there, and I take them across and introduce them to other realtors or other people I know. Because again, I can learn from them, they can learn from me, but we can all work together because there's enough business that's out there.
Yeah.
We don't have to be about egos anymore. We don't have to be about, who's working here, who's working there. Hey, there's enough
That's the part of business that I love right now, man.
Let's help each other
Everything's
out.
adjusting, everybody's collaborating. It just feels like a better space to be in.
That's
right
what's great about it. Look, there are things that we can't do, right, as home lenders. So if somebody comes to me with a commercial space, I'm gonna need to put them with a commercial guy. I don't do that. You know what I mean? So that's the importance of opening up and speaking to multiple people. A lot of people are just closed-minded, and they just want to keep their little hub to themselves. But in actuality, the only way you grow is by mixing with those people, learning from them, and getting as much information as possible.
Yeah, you only from the outside looking in, definitely.
Yeah, you go.
Definitely don't want to be that guy.
Yeah, exactly. And like he was saying, the more connections you have, the more opportunities you have to grow your business.
Of course, yeah.
Because anything, listen, I've had...
We've heard of it, what, your network is your net worth. Yeah.
I'll tell you this much. I've had people that have come to me with $50 million deals on the table. But I have somebody that I could call that knows that type of deal, how to structure it, portfolio it together, and I can call someone to say, hey, this deal just came across my desk. Can you guys... And we've sat down and put deals together like that. Like... That's how it works.
That's how it is. Yeah.
But if I didn't have that connection, I'm not going to say Rolodex because I don't know who has a Rolodex anymore. But if I didn't have that list of contacts on my phone, I'd be stuck. I'd just be able to. I'd just tell that person, can't help you, and that's it.
Yeah. I've been there. I've been in that part too. Before we leave, break down reverse mortgages for me, because there's a pro and con to reverse mortgages. Can you give me both? And if you know what I mean with the con part.
Yep.
All right.
Go ahead, Marnel. I'll let you take this.
So for me, I think I'll start with the con of it. I think there's misinformation out there regarding the reverse mortgage. I think people hear that word and ultimately think, I'm losing something. There's something, something's not right here. What do you mean the bank is paying me money? You know what I mean? So it's really just that. As soon as I speak to someone, and I typically put their whole family together, and I either on a phone call or I drive to your house and I sit down with the whole family. That way, if Uncle so-and-so is like, no, this is what you guys are gonna do. Smart. You're gonna take my mother's house. How, sir? She's on title. All you guys are on title. How does that? We're not on title. How can we possibly do that? So you have to explain that to people so that they understand, like, oh, wait a minute. This is a loan, and this is the problem. A lot of people don't understand. It's a reverse mortgage.
Yes.
It's a mortgage on your home. There will be a lien on the property. So that's where the disconnect ends up happening. As soon as they understand that, the cons are virtually gone. Gone. Because for many people, and look, my family went through it as well. We lost a family member who had a mortgage on their home, right? And we had to continue making the mortgage payments to stay in that home, to be able to keep that home going for the generations. With a reverse mortgage, they give you 2, 3 month, 6 month extensions for up to a year to figure out while you're grieving what to do with the property. You can sell the home, pay back the reverse mortgage program, and walk away with the equity, or you can refinance, refinance the balance of the mortgage, keep the home for yourself, and continue the same exact way. So there's no loss of anything. And here's the best benefit. So the reverse mortgage is a negative amortization loan. So whatever you borrow, unfortunately, because of interest, you are going to owe more than what you initially borrowed.
Makes sense.
But what people don't think about is the house is actually also appreciating. We do not lend 100% for the reverse mortgage for a reason, because if we did, that would be how you ultimately don't get anything out of the house. But if something catastrophic happens where, let's say, your house depreciates considerably, and now a $500,000 house is worth $100,000, and now you're upside down on the home. Family, mom passes away, the reverse mortgage is called due. You guys have to figure it out in a year what to do with the property. Do you have to pay back $500,000 that is owed on the home? No. The reverse mortgage is FHA backed, so there's mortgage insurance that's there as well. So if you owe $100,000, you can either purchase the property for $100,000, refinance the property for $100,000, or sell the property for $100,000 and walk away. You never owe more than what the house is worth. Period.
I did not know that.
I'll tell you something. I remember about maybe 12 years ago when I first heard about reverse mortgages. Again, I was much younger. First thing I said, never going to tell my clients to do a reverse mortgage. Why? I had no information. I had no knowledge. Because like me, and like everyone else, the first thing that came to mind when you heard about reverse mortgage, you lose the house.
Yeah.
That's the misconception.
Yeah.
You don't lose the house. And then I started to learn more about it. And I was like, oh, wait, there are a lot of positives and pros to a reverse mortgage. And then it's so funny because then as I got more and more knowledge about it, I started to have conversations with clients. And I could tell you, I have seen reverse mortgages change families' lives. Completely. Here's another thing we don't think a lot about. And I'm talking about a lot of the clients that I've spoken to are Caribbean descent, right? And their thing is, when I pass away, number one, I want to pay off my house. And when I pass away, I want to leave something to my kids. Yeah. And I'm going to leave the house. And I'm like, okay, but if you had an opportunity to give your children some money now, to invest that money now and buy a home now versus 20 years from now when you pass away or 25 years, what are they going to do with the money 20, 25 years from now? They don't have a home now. What are they going to do with that money 20 years from now? They're going to own their own home and they're going to sell your home and they probably don't need that money at that time. But wouldn't it be more impactful if you could give them that money now?
Give them
and
a
so
head
they're like,
start.
well,
give them a head start.
But how? Okay, you have equity in your home. Why not do a reverse mortgage? Take a lump sum amount of money out. You don't have a monthly payment if you don't want to pay it, or you can pay it and stop the increase of the balance going up.
No taxes.
And that's exactly what I was going to say. It's tax-free.
Is it? Yes. See, I didn't know that.
So you just took out $200,000 or $100,000 or $300,000 or whatever the amount is. You now can give that money to your kids. And they can use that as their down payment, go buy a home, reap the benefit now of that investment versus waiting 20 years from now. And when I started having those conversations, people were like, I never thought about that. Because why? No one educates them about it. No one talks about it. And as Marnel said, it's that constant misinformation because people always have this perception that I'm going to lose my home.
But I'm glad that Marnel said the part that that was like the light bulb for me is when he said he sits down with the whole family.
Yes,
that is needed. That's needed because a lot of people would do it, and the family members won't know what the hell's going on until that person passes away, and now they like reverse mortgage. Then that's when everybody's on defense. The bank is trying to take the house from mom,
and that's why you got to sit down with the kids, sit down with It honestly should be a family decision.
Here's the sad part about it, right? I've sat in homes where the kids maybe don't know the situation that mom and dad are going through, right? I talked about the rise in inflation. It hits seniors a lot harder than it hits us, right? They're on a fixed income,
budget,
right? Taxes are going up. If you're on Long Island, I mean, there are places where seniors are paying $12,000, but their check is $1,800, right? So a chunk of their retirement is coming just for the property taxes. They might own that house free and clear. You still have to pay your taxes, right?
And kids aren't in school anymore, still paying those crazy school taxes.
Exactly. And if you're behind on your taxes, it's the fastest way to get into foreclosure, right? And people don't think about that. They're like, oh no, it's the mortgage. No, your property taxes have a lot to do with that. And when I sit down with them and I explain to them, this is mom's situation. Are you willing to give her X amount of money? And then again, the rise in inflation. If I'm already over leveraged on my own stuff, now I have to worry about mom as well. I don't want to see my mother kicked out of her home. I don't want to see things like that, right? What is the option if I'm at my top of my budget in terms of my house? I have kids that I'm putting through school. Name it. Everything is going up. The reverse mortgage program is the perfect thing to offset mom and dad's bills. There's something called the life expectancy set aside that I talk to seniors about, where your taxes and homeowners insurance can literally be paid for you forever. Removing that fear of, I can't pay my taxes.
Yeah.
How do I live in this house that is now, $12,000 a month with the STAR program?
With the STAR, yeah.
A year, I'm sorry.
And think about it even from like a children's perspective, right? Like, things are tough on everybody. Now think about you having to, again, like Marnel was saying, your parents are struggling because cost of living has gone up. They're now thinking, where do I get an extra $500,000 or whatever the amount is to keep myself just sustained? You now as a child are like, oh my goodness, I need to now step in. Now I got to find a way to maybe help my parents out, come up with an extra $500 or $1,000. So now I'm putting a strain on myself, right?
Yeah.
But we have this home, there's equity in it. What good is it doing when it's just sitting there, right?
Yeah.
Now you can look at ways of using that reverse mortgage, and we don't talk even about that too, where you could get a monthly check coming to you.
You get a check come back to you monthly,
Every
right?
month.
Yeah.
Every month.
So now, as a child, you're like, okay, I don't have now that responsibility and that extra burden where I got to come up with that money for them.
Yeah.
Right? And that's the thing I think is important, like Marnel was saying too. Education is so key, but I think for so many people, for seniors and their families, if they were to really understand reverse mortgages, I think more and more people would be doing it.
Yeah, I
because
think so
there are
too.
so many pros to it.
So I'm glad
and
you
most
guys
people
put in
don't even know
content
you
about
can
it.
buy a home with a reverse mortgage.
Yes.
You could buy a home with a reverse mortgage?
Absolutely.
So here's the funny
Now I'm
thing.
lost. How the hell do you buy a home with a reverse
So
mortgage?
here's the best thing, right?
Yeah,
so
that's
so for a lot of the New York clients that we have that are downgrading, they're going or upgrading, however you want to look at it, but they're leaving New York because New York's expensive.
Yeah.
They sell their house. They're now sitting on $500,000, $700,000 cash, right? They're moving down south. They want to buy this $300,000 house that has land and all of that. They can literally put 40%, 50% down on the property, create their own reverse mortgage now, not have a mortgage payment for the rest of their life, pocket
Yes.
And
the
live off
rest
the
of the
money.
money.
That's a game
Pocket
changer.
the rest of the
Get
money.
the hell out of here. I never even thought of that.
But that's exactly it. Now you sold your house, you bought a house. All of that money that you have, can't you give it to
Now you can give it to your kids.
your
right.
kids?
Wow.
You know what I mean?
And now
Can
you still don't have the responsibility to pay that mortgage.
Exactly.
That's crazy.
Exactly. And here's
That's
another
crazy. I just
here's
messed
another
up with that.
benefit. There's a lot of seniors, and the banks love doing this, but they lean towards seniors for home equity loans, right? There's a home equity program for the reverse mortgage where you literally have the loan, the money that's sitting in the home equity, whatever is available to you for the reverse mortgage program, is calculated at 0.5% of the interest rate that you're getting. So
Okay.
let's say the interest rate is 4.5% on the reverse mortgage. The money that's sitting in the line of credit grows for you every single year at 0.5% more, so at 5%.
Yeah.
Tell me what index out there,
Yeah.
savings or anything,
Nothing, yeah.
that is giving you 5% back on your money, guaranteed,
Yeah.
even if the house now depreciates in value. So
Even if the house
even
depreciates
if the
in
house depreciates in value.
Damn.
So if you have a house that's worth 200, but there's $300,000 in the line of credit,
Yeah.
you can literally pull out 300 and still stay in the house.
That's nuts. I told you, yo, we gonna have to do a part 2 to this. 'Cause I got so many questions. I think we way over an hour already, and I can talk to you dudes forever. We're doing a part 2 to this. We definitely do a part 2.
I'm down for it.
And we'll do it when the rates shift, so we can have more things to talk about. But before we leave, give me your information as far as to contact you. Let them know about Meadowbrook, all that good stuff. And
Yeah. Again, Rajin Ramdeholl. You can check me out on Instagram, The Mortgage Expert, or give me a call. I'll put my information in there. You can reach out to me. We have a great team, great track record of helping clients, closing deals. You got a little taste of it, the experience, the knowledge that's there. We're all about helping people out, and I think in this market, as things start to shift a little bit, like I said, this is where you're going to need experienced people to help you out and your clients out. And just looking at a few minutes ago that we talked about with reverse mortgages, the opportunities that have been created and how you can expand your way of, helping more and more clients. We didn't even talk about non-QM products.
Yeah,
I mean, there's so much more we can talk about that.
Yeah.
The point of all of this is you want to talk with people that can add more tools to your tool belt, right? So the more people you're talking to in terms of clients, you can think, oh wait, I got this program, I know about this program, I can know about this one. You're always there helping your clients out, and the more knowledge you have, the better it is.
There you go.
Marnel Garcon. I'm on Instagram as Garcon_mortgage. You can look me up there. All of my information is there, where you can find my phone number, my email address, everything. And just to piggyback on exactly what he's talking about, look, knowledge is power. So the more you understand, the more you know, the better you are equipped for the changes that will eventually happen in this market, and the changes that are happening now. You want to have an expert at your side that you can call and just, ask questions. A lot of people just don't ask the questions that they're thinking about. You don't call anybody to find out the information that you need to know. And this is why we lend our expertise to help you guys out. So utilize it, reach out. There's not one person on our team that will not answer the phone to you, will not be there to guide you through this process. So take advantage of it.
Dope. Before we leave, make sure you like, subscribe, hit the notification, all that good stuff.
Definitely.
The podcast is going to drop. It's going to be fire because I'm going to go back and watch this one again because I learned a lot on this one. So definitely log in. Thanks for coming through, fellas.
Appreciate it. Thank you.
Appreciate that. That's out. We out. That was fire.
Thank you, bro. Thank you.
That was dope.
That was fire. I like